All right, good morning everyone. Welcome to this live intraday strategy webinar. Today is Thursday, August 11th. Michael Boutros here with you, Francis, Eileen, Graham, Alan, Aurelian, Doug, Kelly, Mark. I try to get through as many as I can. Good morning to everyone here in the room. So I hope some of you caught the fireworks from the RBNZ last night. Fading the move, as we suspected, was the right play. I'm still holding a couple of shorts off that. We'll talk about that. Aussie dollar continues to hold that broader daily slope. It's ridiculous. The larger one that we're looking at with the daily chart, literally catching the highs 2 days in a row now. So I do think that's susceptible for a little bit more of a pullback. Inevitably, you do look to buy that. So we'll talk about Aussie. Euro dollar, the breakdown of the short-term slope has materialized. So that as well has traveled through two of our targets. And last but not least, I did just want to review the chart that I put out on dollar yen. I haven't taken any positions on that. Don't see anything relevant right now. But certainly we're coming into the bottom of the range, so it's something to keep in mind and on the radar. We'll discuss dollar CAD real quick. That slope that we talked about yesterday in the webinar actually ended up being the low. So we rebounded right off that. And we'll touch on crude and gold. As always, any questions, specific trade setups, feel free to throw them on the message board. Francis, good morning to you and everybody in the room, he says. Eileen, fireworks better at a distance. Adam says, good morning. Great to see you, sir. All right, let's jump right in. Here's what current relative price action looks like for the greenback heading into the U.S. Open and the dollar index. So perfect tag of the 50% retracement. We talked about that yesterday, 11,090. I still think there's room to the downside. You saw a quick reversal here, back right at the 38.2. Matches up very nicely with the opening range low and that initial drop that we made for July trade. So you're looking at near-term resistance. Really not much going on. Okay, still has the risk for a drop lower. Into structural support, which still lines up with that 50% right around 1190, where we tagged yesterday essentially. But that's really the break that you would need to see to validate a larger scale reversal here in the dollar index. And then again, you have a really nice confluence here, 1618 extension off the high, or excuse me, a 618 extension off the high and a 618 retracement off the low. That gives you right around 11,850, 11,853. All right, so not really so much of a tell. Typically, we like to look at the dollar index as sort of a barometer for base dollar moves. At this level, you're kind of sitting mid-range. Again, here's the monthly open. You're just above it. Wouldn't be too surprised to see this thing travel a little bit higher, but at the end of the day, broadly looking for some exhaustion highs here to get back on the short side. Relative performance for the day heading into the U.S. session. Obviously, we'll talk a lot about Kiwi. Strongest move, 0.65%. We're still short on that. Aussie dollar up 0.17. Loonie with an advance of 0.12. Sterling, biggest loser, down 0.38%. Not really so much interested on sterling dollar, but sterling yen continues to tempt me by just dipping its feet lower and lower and lower. So we're still within that descending structure. We'll take a quick brief look at that. I don't really want to stress sterling yen yet. But certainly we'll take a look at the pound yen as well. Euro down 0.18%. Michael Martin says, hey, sorry I'm late. I got finals this morning. Oh, Mike, hope you did well. Good luck, sir. All right, so let's jump right in. If there are no questions on the dollar index, let's jump right into where the fireworks were for the majority of the night, and that was Kiwi. Here's what Kiwi dollar looks like. You can see the daily chart looks pretty radical here. So a couple of things to note with regards to what the RBNZ said. I kind of tried to give you a synopsis here, but the basic premise, and it's funny because whatever, like I said, whatever story the headlines are going to run with, the technicals were exactly the same. We were looking to fade Kiwi strength. Now, it just so happens that the headlines, sort of the highlights that hit all the financial news feeds and all this, was two major points that came from Wheeler. One, that a 50 basis point cut was not discussed, nor was it quote-unquote seriously considered. Okay, if you recall, we talked about the webinar yesterday that there was basically 100% likelihood of a 30 basis point cut, which means that there was a likelihood that traders were factoring in 50. Usually, like I said, they don't do anything in increments of 25. If you looked at Overnight swaps, which we did, it showed you 110% expectation, which is to say a 10% expectation for a possible 50 basis point cut. So when they come out and say that we weren't even looking for 50, it wasn't even discussed seriously, that was a little bit of a lowering of expectations for how dovish the central bank was. The second point, and I think the one that's a little bit more interesting, was the fact that Wheeler came out and said the central bank had limited influence on FX markets. We know that he's notorious for jawboning the Kiwi. They noted that the Kiwi was too strong, both in the statement and the accompanying comments from Wheeler saying that they do want a weaker Kiwi, and they specifically noted that they reduced interest rates to take pressure off Kiwi dollar. All right, and with that, it essentially leaves the room for further cutting down the road if Kiwi continues to appreciate. It's pretty dovish, broader and overall, but less dovish than expected. And obviously you saw the Kiwi rip. Now that doesn't change the technicals, okay? This thing failed. Today's close is paramount. We have to close above 72.95, 72.92, this region right here. The March low day close from last year. There's the low day close and the high day close from this year. Okay, now we're going to have a new high day close obviously after today, but where we close today matters. And anything under 72.95 in my mind is still fair game. Guys, can I just get a quick sound check? I think Ruth is having a problem here. Just want to make sure it's an isolated issue. Okay, thank you. Horace, thanks. Adam, thank you. Eileen, appreciate it. Seems just to be Ruth at this point. So on that spike high, as soon as we failed to break through that previous monthly high, which is the yearly high, there was an exhaustion trade, kind of staring you right in the face. Here's what we looked like last night. Levels were unchanged. There is the high from July. We spiked right into it. I didn't get anything on the initial run. Okay, obviously this is a very quick moving market, emotional move. It's very hard to catch these moves. But on this secondary rally, you had a perfect opportunity on building divergence. Price action making a higher high on a closed basis. Oscillator making a lower high. And remember, we always talk about these divergence signals. When one reference point is above 70 and the other one below, or one is below 30 and the other one above, those typically are going to be decent and strong divergence signals. So from the 30-minute, looked like it was kind of vulnerable, looking heavy. As soon as you delved into the 5-minute and the 1-minute, you saw some real signs of exhaustion with momentum starting to hold 60s resistance. And for me, it was kind of a decent risk reward. So we're still holding shorts. Like I said, I've peeled off a good amount 6 different times here on the way down. We're up about 51 pips, but still think it looks vulnerable. Stops are well into profit right now. So they're just above the London highs, which is somewhere in the range of 72.75, 72.76, something like that. So it was an interesting release. And again, not what everyone expected, right? They got the 25 basis point cut. They leave room for more. Relatively speaking, they're still the highest interest rate yielding central bank out of the developed countries at 2%. So there is room for the downside. That being said, again, we're trading the technicals. We're not trading central bank policy. So near-term support still 72.27. This is the break that would inevitably give you a larger downside move. And that would be targeting essentially this swing high from earlier in the week, 71.80. We based there right on the release, and that converges later on heading into the close of the week, tomorrow basically, early Asia tonight, with basic median line support, basic trend line support off the weekly lows. So that's if we get the break. I would expect to see some dilly-dallying here. If the U.S. Open breaks and we kind of pop right higher, this is still the bearish invalidation level. Okay, if it continues to move higher beyond that, I'm not looking. This is still my bearish invalidation. So anything above 72.95, 73, I'm not interested in any short exposure from that point. All right. Any questions on Kiwi dollar. Graham says, Mike, did you go short on Kiwi dollar on instinct? I saw no triggers on the 1 or 5 minute chart. Yeah, no, there were signs of exhaustion in price for sure. I told you last night I actually had a short on there from 73.05. I guess, yeah, here's what it looks like on the live chart. Graham, I'll walk you right through it. So the initial rally, right, spiked above 70. You saw this thing pull off, did nothing. On the rally up to the upside here, you saw momentum start to fizzle out, okay? And this is, let me take a step back. I don't want to stress the momentum trigger. There was something there, and the 60 break accompanying with a move against essentially the opening range high for the session was really the entry. One thing I want to say is this: we don't want to just stress the momentum trigger. That's not the only thing we're looking at. For me, Graham, this was just a basic risk to reward. 73 pop versus 73.40. Look at where we were in price. My stop wasn't even against the high. My stop was against that July high again, just above it. So I didn't even have a stop fully against the high, right? And oh, let me bring that back. Too many windows here. And here's what we look like on the 1 minute chart. You had some building divergence, price action making a higher high. Even from here, price action making a higher high, price action making a higher high. You had a series of lower highs. And in fact, this is what I was looking at right here. I even had a trigger draw, and this would typically be a bullish trigger if it broke to the upside. But as we came into it for the third tag, Graham, it held, it held, it held. As soon as I saw the 60 break, I jumped in. Because, sorry, it's going to keep doing that every time a new bar comes up. Because failure to break that on a third final attempt, that basic resistance trigger on a 1 minute, and then it broke 60 to the downside, that screams exhaustion. You have 3 reference points of divergence followed by 60 break in momentum. Does that make sense? And sometimes you just got to feel it out. If you look at the nature of the advance, again, really fizzling. You got a lot of back and forth, and at the highs as it struggles. As soon as you get that break of, this was, right on 10 o'clock, right? As soon as you got a break of that initial range that you've held right below resistance, for me, that's, with the tight risk reward, it's worth it. Thanks. 30 pip stop too rich for me. And again, event risk trading or post-event risk trading is never going to be that easy. Horace says it does. I did a short, but I use a moving average. Oh, Horace, you're adding to that. So you're using moving averages. That's another great thing. Again, pure momentum traders, this was another trade that would give you a clear-cut signal on a move like this, right? Especially when you see a contraction in momentum, even if it's worth just the 5 or 10 minutes that this thing kind of held on a 1 minute chart, the momentum signature would tend to give you a little bit more of a tell there. Absolutely. But you never know. You never know when you're fading a high on event risk, which is why I play it so close to the chest. So you can see as soon as I got in an 11 pip, 20 pip gain, I started chipping a little bit off. At that point, your stops go right against the high. So now you're working with a 10 pip stop. And as you get through into the support targets, you're just chipping away. 30 here, we took another 60 here, another 58 here, 60 this morning. Stops are again above the London high. And at this point, you're already locked in at 20 pips gain. So even if the whole thing reverses on you, you know, you're kind of in the green already, or in the black. Does that make sense? Key support still 72.27. Like I said, near term. That was the hourly reversal from last week. Also coincides with a nice 50 line for the current operative structure. Bearish invalidation, basically still 73. Right here. And Horace and Graham, just for the record, you know, if you guys are working with a specific trigger or specific momentum strategy or an oscillator that you're comfortable with, more power to you. Okay, you don't necessarily need to conform to what I'm using. For me, it doesn't matter. It's all about the levels and the trigger. There are multiple ways of getting to the same trigger, okay? Whether you're looking at a moving average or stochastics or RCI, whatever, it doesn't matter. What really matters is the analysis of where you are in trend and the key levels that you're targeting. Okay, let's just put that out there. Any questions on Kiwi? So moving forward, Horace, you're more than welcome. Moving forward, if we get the drop into 72.26, which, by the way, for the record, I had a limit down there, take off some more, and it literally got missed by 2 pips. That's the name of the game somehow, but whatever. If we get the drop down into this region, I would be looking to take a little bit more off the table, and again, bring our stop up to the highs for the U.S. opening range, which would be basically right here, 72.50. All right, moving right along from last night's update. That was Kiwi dollar, no change to any of those levels. Euro dollar. Well, first I want to jump into Aussie dollar because I think this is the other one that I was a little bit more interested in. Haven't really touched euro, although the levels are pretty clean as well. Here's what Aussie looks like on the daily chart first. And this is just, if this doesn't turn you on, I'm not sure if you're in the right market. Are you thinking are you taking 1/10 of the trade off at a time? Steven, it depends on the level, man. So I guess you're talking about this. It's not necessarily 1/10. It really is determined by the significance of the level. So for example, let me bring that Kiwi chart again. So for example, on a dip into this region, I was actually looking to take off half of the trade. Again, that didn't trigger. On the initial dip into that 74 region right here, I took off a little bit more of the trade because momentum was at a clear rebound at that 40 level. And this was the first break sub movement above 60. So from an above 60 move, if the trend was going to fake you out and kind of reverse, that's the first place you would look for momentum to hold. So on that dip, took off a little bit more. These are kind of just reducing leverage, reducing risk as the trade starts to progress, and that's just because I want to bring my stop in as soon as possible. So I won't take a break-even stop for no reason. I'm going to take something off the table, and as soon as it starts to shave off a little bit, I'll bring my stop to break-even. Then I can be a little bit more comfortable in stretching out my legs with the rest. Does that make sense? It's really where you are as far as, again, if we had come into this key support here, I would have taken out a little bit bigger of a chunk. Because we came into a near-term momentum support, that one was a little bit bigger of a chunk. These are kind of just chips at the broader core position. And this is not the only way to trade this, guys. There was another opportunity right here to get back in on the short. I was looking at this earlier today. This was an opportunity where you had basically a 12 pip stop. You had a rally right here, momentum fizzled out, you had a trigger both on the 5-minute and the 1-minute right here, okay? And you're looking for about 22 pips per scalp. So the opportunities are there. Even trying to fade the move would have been something I would have been interested in if I wasn't in the trade. So if you're in London, if you're one of our subscribers in London and you're kind of looking for some action on this trade, as you came into this support region, look what momentum did. Nice strong divergence. Price action making a lower low, the oscillator making a higher low, boom. So you see consolidation break on that one. You did have a really nice decent trigger here. Well, there's actually one right there as well on that slope. Wasn't the sexiest trigger, but a break, test to support, shuffle. I probably would have taken the trade somewhere in this range here against the low, looking for about 22 pips. So there's a lot of different ways you can play the levels. Obviously, the counter trend trade right there is not the ideal move, right? Because we talked about this yesterday. The whole notion of going into the release was to fade a Kiwi rally. So your initial inclination is to be looking for rallies to sell. But even on a near-term basis, there are opportunities on both sides of the market. Oh, I think I missed a question here by Michael. What's the importance of a dollar yen kiwi or dollar kiwi correlation? Sound good. I guess because they're both dollar crosses. I haven't really overlaid that to give you a fair assessment, Mike. Horace says, hi, good morning. Can you look at dollar peso and dollar ZAR to your outlook? Can you add them to your outlook? Sure. Let's take a look at dollar peso. And what was the other one? Dollar ZAR. I don't even know if I have a chart on the ZAR, but I'll bring something up for you. Horace, bear with me. Let's just get through these setups. Okay, Steven says understood. Right on. All right, I want to move into the next pair here. We're getting a little bit deep into this session. Here's what Aussie dollar looked like. And again, this was kind of absurd. I was looking at this yesterday, kind of just staring at myself. Here's what the daily chart looks. And we all know this chart. I showed this yesterday in the webinar, how clean and accurate to the pip this formation has been for the Aussie dollar off of last year's low, catching essentially every major key turn this year, right? Well, just turns out if you take a sliding parallel of that same slope and extend it off the June high, it's now been tagged another 2 times to the pip, with last night's rally failing exactly at a confluence of the 88.6 retracement from the decline off the high and that sliding parallel from the June high. So don't want to say I'm necessarily super bearish, but the long side is vulnerable sub 77.56. And similar to what we're looking at in the Kiwi, just in this respect, is if Aussie dollar is unable to close today above 77.35, which is the yearly high day close, that leaves the long side vulnerable, okay, for a near-term pullback. Just so happens that this setup, this key area of reference for resistance, also manifests itself perfectly on the 30-minute chart. Check this out. This is the upside slope that we've been following for the last 2 weeks on Aussie dollar. Guess what? Those last 2 highs, right along near-term upslope resistance. Okay, there's that 88.6 confluence that we kind of rebounded off of perfectly yesterday. So, not necessarily trend shift. No one's calling for the high or the top here in Aussie, but certainly the long side is vulnerable, sub 77.35. A break below 76.88 is really what would be needed to solidify a little bit more of a turnover in near-term price. You can see that momentum has already started to fail here a couple times ahead of 60. Look for that break below 40. I'd be looking for a break below 76.87 to give us a little bit more of a correction towards that 50 line, and ultimately 76.30 would be a nice area of reference to try to look back for possible entry on the long side. But story looks still pretty good here. Really clean. Kind of stalled out. There wasn't really much play to get in specifically last night, but I do think before the end of the week out, you could probably squeeze out another trade here if we kind of get a failed rally towards 77.35. Any questions on Aussie dollar? Again, this would have actually been a nice opportunity for a possible rebound for a long. Nice confluence support. You've seen multiple triggers, multiple inflections off of that trend line. But you didn't quite get that dip into that region. So look for a break of this basic London opening range, London Asia range session to give you a little bit of a tip. Again, broader outlook near term remains bearish or risks to move to the downside sub 77.35. Okay. Ruth, I'm assuming we're good on sound that you're back here. Okay, British pounds you want to take a look at. I'll add that to the list. Let's start running through these. We got a lot to go through. So if there are no other questions on Aussie, feel free to throw them out. Do you track commodities to give your insight, or is it irrelevant on such a small time frame? So Michael, I do track commodities. I do track them only on daily charts. I don't really intraday trade commodities anymore. I used to be very active trading intraday commodities on futures when we were when I was trading futures managed accounts, but not so much anymore. But if there's a specific commodity you want to take a look at, feel free to throw it out. Aussie Kiwi, yeah, we've been following that one. We'll take a look at that if we got time, Mike. But Aussie Kiwi, look at the radar chart on my homepage, on the intraday homepage, the intraday charts page. Okay, that was Aussie dollar. Also on last night's update was the euro, and another trade where it looked like it had an exhaustion on tap. The daily chart on a closed basis. I just want to show you how ridiculous this is. Again, if you just bring this into a close, which is why we have to stress the closings of each session each day, guys, so important, more so than an intraday spike, on determining what the medium-term, near-term outlook should be. Okay, on a spike through a key resistance, that means nothing. The markets are emotional. They don't work in a vacuum. We'll overshoot resistance and undershoot support all the time. It's where those sessions close that really have more technical significance. So you saw yesterday a close below that. There's the monthly open as well. It tells you you're at risk for a little bit of an exhaustion trade, and we did discuss this in the webinar yesterday as well. Here's what the 30-minute chart looked like. Okay, and here's what we looked like last night. So resistance at 111.88. You saw momentum. This is not necessarily divergence, but still something that suggests that you're seeing topside momentum start to get tired. You got divergence on this initial stretch higher, but not on this initial stretch higher, right? Because the closes were identical, well, almost identical, right around that 111.88 level. Long story short, the risk was, and as I noted, the risk was for a break below 111.61 to give us a lot more of a dramatic decline, or you're risking a bigger decline with a break below that level. It's exactly what you got. Right heading into the open, or just ahead of the open of London trade, you saw a quick outside candle test the monthly open as resistance, fail, and take out the opening range low. Okay, so that drop materialized and took us basically into a soft support target here at 111.35, 111.36. Topside resistance near term is right back at where former support was, 111.60, 111.61. So we're heading into this region again, near term. That's resistance. Not really, what's the word I want to use here? I'm not really keen on necessarily trying to play the long side yet. I do like the broader long side for the euro, but I think after this move and after that rigid resistance and clear-cut tag you got off that 76.4 retracement, you probably have another low to make before this thing turns around. Where do you give the most weight on divergence for time frame? 5 minute, 1 minute, or 30 minute? Eileen, great question. The longer term chart you go, the more prominent, the more significant it is on any, in my humble opinion, on any oscillator, right? Let me take a step back. Eileen, it depends what you're trying to do, what you're trying to use it for. If you're trying to time a 5-minute entry for a scalp, looking at a 30-minute RSI divergence and looking for that to actually materialize, you might actually miss the trade. If you're looking for a trade that'll last, anywhere between a day and a half, a couple of sessions, 30-minute divergence will tend to be kind of a really strong signal. So what I like to do is we're looking at the 30-minute chart for our guidance, right? And then we're jumping into the 5-minute for the actual triggers. I'll still go back to the 30, and if I see that we're seeing divergence there too, great. Maybe I won't take profit at the next target. Maybe I'll leave that open and wait for the next move lower. So the broader out you go, the longer term that divergence is basically suggesting that momentum is getting tired. And one of those things is, Eileen, the tighter in you come in time, the lesser effective the timeline will be. So if you get a divergence signal on a 5-minute, don't expect that signal to be something that you can rely on, heading 20, 30 minutes out. It's really, really short term. So when you get those signals, they basically only last for a more limited time frame. Does that make sense? Makes sense. Okay. Questions on euro dollar. Risk remains for a move lower while below basically the monthly open at this point, 1170. Soft support at 111.12, and then a drop into 111 would really be a nice area of which we'd start to look for some long entries. Again, here's what this looks like on the 120-minute chart. Okay, and that is Euro, Aussie, Kiwi done. Let's just touch base really quick on dollar CAD, and then I guess we'll just reflect on crude. So here's what dollar CAD looks like. Again, this is a 2-hour chart. I guess I'll bring it into an hourly real quick. I know there's probably looks like there's a million lines on here, guys, but it's really not that complicated. It's one pitchfork that we're working off the high, a modified pitchfork, and these are just some parallels. Let me soften this just a little bit. There we go. And remember yesterday when we were talking about this in the webinar, here's the 8:30 slot as we were starting our webinar. We were talking about, look, this is basically support. You have structural or slope support, and you have the lows. Not only the lows for essentially the month, but the lows from last week. That spike low came right into it. You didn't have any divergence here. Basically, the trigger did materialize while we were talking here in the webinar. But long story short, the rally coming right back into that 618. You see a nice little range here forming, and here's the monthly open. We're sitting on it as support. I'm not gutsy enough to do anything on dollar CAD just yet, but I just want to show you the daily chart and the implications of where we could be. Okay, here's the broader formation off the low. There's that sliding parallel. Closed basis caught the lows perfectly last month. Here's your monthly opening range low, which held as support. Here's your monthly open, which we're still holding as support. And here's the stretch low, which was right into that tag yesterday. So long story short, your immediate range of focus is 131 into the low that we made yesterday. That's the focus, which is basically, let's call it 130, 129.90. This 100 pip range is what I'm focusing on right now. A downside break, you're probably looking at another tag of that 100-day moving average and the lower parallel. Bullish invalidation for the broader uptrend off of that yearly low. If you see the upside, I'm looking for continuation, looking for a tag of the July high day close. It's 131.86, the upper parallel, and inevitably a break into this key region, which we talked about so long last month. You have that swing high from 324, a basic 38.2 retracement of the decline, and the 200-day moving average all stacked up with that upper parallel. So pretty clear. Where we go immediately from here is kind of still uncertain because the daily chart or the intraday chart for me, momentum is kind of boring here. Ever since that break, even that upside break on the trigger didn't give you anything really. I mean, it did give you a rally from 130.40 into 130.70, I guess, which you could have taken. But it's still a lot of jackknife back and forth. So heading into the U.S. session, if we do see a dip back into that 129, 130 area, I'd be looking for possible long triggers against the lows for a rally back higher. If this breaks near term, like I said, expect a little bit more of a deeper drop towards that lower parallel on the daily chart that we just talked about. So where this puts us at crude still has me itching my head. If crude had stretched into that key resistance that we talked about yesterday, if crude had stretched into here, I would have been much more comfortable with the notion of dollar CAD having bottomed. But it didn't, right? It turned right ahead of that. Here's again, the monthly open. We closed right above that yesterday, literally. A quick brief dip below, and here we are moving higher. So I do think you can still make a tag of that 38.2, which means dollar CAD could still fake everyone out and make one last reversal to the low. Okay? And point in fact, if we do take that into account for dollar CAD, on its face, you know, this was a clear and easy discernible break of the weekly opening range, which would entail, yeah, you make a weekly opening range early in the week, you look for that late week Thursday, Friday low. So I wouldn't be surprised if we kind of move lower here and look for more support back towards 130. Questions on dollar CAD? or crude for that matter. A little ripperoo. Look for near-term resistance near the weekly open, but if we make it through that, kind of puts the focus back on the upside possibly. Actually, let me check out one thing here, near-term price for crude. Just missed 1618 here. All right. Okay, Francis, please, can you take a look at Aussie CAD? This thing has been in a range since Sunday. Okay, I will try to fit it in, Francis. I know it's the last webinar of the week. I will see if I can fit it in. Let's run through these. So that's dollar CAD. Dollar Swiss, the only thing I wanted to say was a follow-up to what I noted yesterday. The thing has just made a break of that near-term upside trend. So I remember we were talking yesterday and we said, look, looks like a break to me of a near-term ascending trend formation. But momentum wasn't really all that, there wasn't much back and forth. This thing just continued to slide. So as far as trying to pinpoint a near-term entry, it was tough. Even after yesterday's webinar, after this thing rallied up into that 97.80 level, there wasn't, I was kind of watching it. There wasn't really a high to try to take the trade against. And as it came off, there was a near-term trigger, but then do I take a short right here above support? No. So there really hasn't been anything for me to operate on, but I just did want to point that out that, that break of the near-term upslope that we talked about is in fact materializing. I'd look for more prominent support down lower near that 97 handle before this thing is all said and done. That's Swissy. Last but not least from my end, and I'll jump purely into your questions, is gold. So game plan from the radar charts on Sundays, pretty much unchanged. We came right into 1355. That's where the thing found resistance and pulled off. Now at this point, that's going to be sort of a main area of interest still. The high was actually stretched into 1360, 1356, but you can see from that high yesterday we closed at 1345. So a wick of that nature, the dramatic nature of the pullback, has me still looking for the possibility, as we noted earlier, for a final low here, drop back towards 1324. Remember the weekly, the monthly opening range essentially is set at this point. Here's your monthly open at 1350. The resistance in near-term bearish invalidation is still at 1355. Support right basically down at 1325 if we get that move lower. If the trigger breaks out to the upside and we clear that region, broader uptrend is back in focus. You're looking for 1380. But the risk still remains weighted to the downside while below that 1355 level. Okay, now let's jump into your questions. I have a whole lot of stuff written down on my list here. I'm going to try to take them in the order that they came in. Let's see here. Horace, I think, was it, that wanted dollar peso and dollar ZAR. I don't really know if I have anything set up. Let me take a look. That kind of broke out. You got a breakout there. Horace, I haven't actually updated this chart since I transferred from MarketScope, which is why you're seeing a lot of nakedness here. He says, what's the interface that you're using? I like it. Oh, this is TradingView, Mike. You can go to tradingview.com and actually get a free account if you'd like. But it's all cloud-based, so it saves on the cloud, so I don't have to keep transferring charts because I work in multiple offices, so it makes it a lot easier. So right off the bat, you have the 100-day moving average, the 50 line for the current operative descending structure, and last month's open, which I won't stress, but that kind of sits right here near 1820. Hmm. Okay, so I would say broadly speaking, I'm bearish on this, but I would say that you're coming in some near-term support, and that's basic. Erase everything I just did from your mind, and if you just looked at this, you would say we're coming into the bottom of range support, right? Here's your June lows. Here's your July lows. You're basically coming to range support. You got the 100-day moving average, basic trendline support off that low, also converging on that region. If this slope is proper, and you don't know, because we haven't got any major inflections from either trendline the median line parallels or the actual median line. So I don't know that this slope is in play, but if it is, it also highlights that same region. All right, so just a quick look, Horace. This is what I would be saying. I'd be looking for an exhaustion low near term. Momentum is coming into 40. We haven't seen a 40 break in momentum since back here. Obviously, that 40 break charged a much larger decline into the lows. But ever since we recovered from that condition, it's been 40 support, 40 support, 40 support. Here we are again. So I'd be looking for near-term short-side exposure on a rally. You'd be looking for possible re-entry. I'd have to rework the charts. I really don't want to go on the line and give you an entry here for the long side, but some basic levels I'd be looking for would be something like this. Again, you'd have to readjust this slope a little bit, but you'd basically be looking for a recovery near those highs, near that pivot. If you look to the left of my cursor there, big region of resistance. You also have the monthly open, converges on that basic trendline resistance, and you look for another low. That, or if you do see a break below this, I'd be looking for a pullback into that region of resistance, again, to try to push a short. But this is much more longer term. It's a daily chart. Hope that helps, Horace. Just a quick outlook. If there's a lot of interest in this pair, I could definitely put together some scalps on it. But not a pair typically that's very conducive to trading. The spreads are blown out, and if you're scalping on a near-term approach, not necessarily your best option. Ruth wanted to take a look at British pound. I forgot to go over that, so let's do that real quick. Ruth, here's what the pound looks like. Finally coming to that support structure. All right, this is the level to hold, guys, for the pound. Near term, remember, this equals 100% extension, 2 equal legs off the high. This is the high from July 14th. And this is the low day close, 129.26. Weekly opening range, I would call that a failed break near term. Momentum, you are getting some divergence, not the most convincing, but one of the reference points below 30, one of them above. As far as a 30-minute trigger, can't say this is the most convincing either, but there is this. Remember, you have to wait for the candle close to validate if that's a break or not, because this could duck right back below. This might actually be a nice little rebound here. Ideally, let me take a step back. Here's what it looks like. Here's the low day close, right, at 129.26. So we haven't quite stretched into that. Ideally, into the U.S. session, maybe you get another dip into that support. You get some more divergence on the momentum barrier, give you another opportunity to get a better long with a stop against that low, because kind of stretched out in the stop right here to try to get long. But I'm looking for an area of interest here for a possible near-term recovery. Okay, remember where we've come from just a couple of days ago, 133.60. It's been quite a sharp decline here. Yes, they're going to implement some unprecedented measures. Yes, they're going to start buying direct corporate bonds. But, at some point the market's going to take a little reprieve before it continues. So I don't want to get cute with it, Ruth, and try to fade it just yet. Plus, let me bring up the 5-minute, actually. Hold on one sec. Yeah, it's starting to look a little bit more constructive even here. The immediate approach still looks a little bit at risk. Okay, here's a sharp turn below 70, and you could get a little bit more of a pullback. But if you look at it, what you want to see at these really sharp reversals at key lows is this kind of price action. Very low tolerance, I call it. When the market comes there, you don't want to see it sit there and kind of dilly-dally. You want to see this quick rejection. On every attempt at a pullback, it's just a struggle. The market fights. It's like trying to hold a balloon underwater, right? It's kind of what you're starting to see the makeup of here. Now, momentum near term since basically early London has kind of been lackluster. Here's 40 support, here's 60 resistance, here's a turn ahead of 40, which means we could be in for a little bit more of a range-bound session. At the end of the day, this did break, or did not even break, excuse me, the weekly opening range. So if anything, it's at range support on a rally or a move higher. I'd be looking for resistance near that upper parallel there. That we rebounded off of earlier in the month. All right, on a break lower, I wouldn't even stress this 100 at this point, to be honest with you. I think you risk basically a drop right here into 28.50. That longer term trend line support. And the low swing low that you made there post-Brexit on 7-Eleven. Not too much conviction on this one, but if you put a gun to my head, I'd say you probably make a stretch low into U.S. trade and then kind of give you a little bit of a rebound. Not really something I'm interested in necessarily at this point. Ruth, hope that helps. That is pound dollar. Next was a question from Aussie Cat. Francis, I think that was you. This thing has been in a range since Sunday. Ruth says, okay, thanks. You're more than welcome, Ruth. Feel free to throw out any other questions you might have. Aussie Cat looks like this. Ooh, I call that a failed attempt at a breakthrough the 2016 Open. What do you think? Here is the monthly open. Momentum at diverges. Momentum at resistance. Okay, and let's get the 30-minute in view here. Here's your weekly open. All right. Whoops. Okay, so this is what I would say. This is something actually we had checked out not too long ago. Oh, I'm missing this week's open. I'm sorry. Okay, so you're right. It's been a pretty tight range since the start of the week. right up near resistance. Weak divergence into the high. Nice channel resistance, though. This is the same basic support if you extend it off the high that you made there on the swing for 623. Francis, it looks like you're basically riding that high as we speak right now. This trend line that you see here in red, this is this trend line here on the daily chart, just extending off the high that we made back in 2013. Tagged again last year, right in December. And it looks like basically you've been sitting on that as support for the entirety of the week. Okay, and today you're posting an outside day reversal candle, but at the highs. And a lot of times this actually near term, Francis, could be signs of exhaustion. Whereas if you had gotten this outside day reversal to the upside at the lows, that would be a much more conviction reversal type of trade. But this is an outside day reversal pushing higher at the highs can oftentimes also be exhaustion. So for me, again, not something I would necessarily operate on right now. If you put a gun to my head, I would say you're at risk for a near-term pullback. And that would kind of bode well or fit in well, let's say, with what we're looking at with the Aussie dollar, possibly pulling back a little bit deeper before continuing higher, and with dollar CAD possibly showing some weakness or CAD weakness, dollar CAD strength. Francis, does that make sense? I like the idea of a pullback before this thing rips to new highs, and I mean like just completely go AWOL. But you're right. We're right in the opening range still. We kind of seen a couple of defenses here of the weekly open. I don't know. I don't know if I have it in me to try to fade this just yet. Let me see. What's the ATR on Aussie CAD right now? Oh, it's not in my subscription. Hold on one sec. It's about 20 pips a quarter a day ATR right now. Not bad. It's kind of where we're at the lower end of the bounds that we like to see. But I would like a little bit more structure to near-term price action before I start to mess with this thing. Francis, does that help? He says, sure, thanks, you got it, you got it. Hopefully, let's just clear out of this. We get a break of the downside break of this near-term range. And then you could just basically tack on a basic retracement. This isn't up to date, by the way. That's the retracement off the high we just made today, which is a big assumption, so don't stress that just yet. This is a moot point at this point as well. Just want to see where the 88.6 comes in. Yeah. One, two, three tags. Puts resistance right around here. Or support, rather, right around here. On a downside break of the range. Not a bad move. About 100 pips lower. Ooh, and you also have the high day close from last year, which is also huge. We almost missed that right here. Big range. Yeah, I would expect a little bit more kickback from that. Feel free to take a snapshot of that if you need it, Francis, for future reference. Scott says Euro Pound if time permits. Scott, let's take a look at Euro Pound. Where is our friend Euro Pound? There we go. The beast. The beast. All things have held constant here from last month and that debacle with that dip below the upper parallel. We sat there all the way into the open of this month. Honestly, I really had no clue what this thing was doing into the start of this month because this was messy. You had an outside day reversal on an attempt for a rebound off that region, which failed again. You kind of saw a week of just flat, basically nothing, with a really contractionary range. Here's the breakout that looks interesting to me at this point. The key resistance you still got to keep in mind is 87, basically into the 87 handle. That's a basic 618 retracement from the decline off the highs that you made in 2008. And you also have that basic slope resistance extending off that 2008 high coming into that region. And this slope is just a mirror of the same slope from those secondary highs, the same slope off the high from extended from 2011, which caught a couple of different pivots. So that brings the attention still to 87 on the upside. I'd stay constructive above basically 84.80 because that was the nice weekly opening range. You made an outsider day reversal that took you through the initial monthly opening range. And on a pullback, that's where you'd want to see some support for a continuation higher towards 87. I'd expect to see a pullback, though, just based on the fact of euro weakness and possible pound at support near term. Scott with an emphatic, thank you, sir. You're more than welcome, Scott. My pleasure. I did skip over dollar ZAR. Was that for you, Horace? Again, a pair I don't really have even a chart on, but we can bring it up. Well, a couple things kind of just pop out right off the bat. Okay. Obviously, again, I haven't been following this, so I don't have the monthly breaks in to kind of give you an easy visualization of where we are in trend. But here's your monthly open. Basically, you haven't seen an update yet. Yeah, you saw a couple of updates, including today, since the start of the month. I think the big break was right here. Basically 14.60. You stay bearish below the monthly open, which comes in right along that median line at this point. Obviously, if you see a break lower, major key areas of interest are this confluence and this confluence. But I don't even have a decent reference on a low to take a retracement. I guess we can use that low from 2001. It's the close low there at 13.027. These are the levels I'd be looking at. Again, I'm just going on the fly here. Not a pair I've actually ever really been serious about, but your monthly open coincides with that 50 line. So that's what I'd be watching as major key near-term resistance. Maybe interim resistance here, but this is sort of a major region I'd be watching. A break lower, look for a soft target in that 13,027 level, but you're basically looking at this region here, which is basic support, and the 50 line if we're working with this slope, if this is the proper slope. And then the 100, which would be 2 equal legs off the high, would basically take you into that 3270 region. I would not get cute and try to go long this if that's what you're thinking, Horace, or if anyone's trying to fade this move. Not necessarily, in my humble opinion, the best play, even from a scalp perspective. Daily momentum is an oversold rather, excuse me. Remember, when the market is in that condition, that's when the push is the strongest. It's coming back from that. If this were to break back above 30, that would be a near-term recovery signal. But look, the last time we broke above 70, for example, the entire time this thing was above 70, this thing ripped. And if you were sitting there saying, oh my God, this thing's overbought, I should be looking to sell it, you would have been having a real rough time as this thing ripped to new highs. So just be cautious of that for anyone who's seeing this chart and says, oh, well, it looks like it's a nice possibility for a short. Does that help, Horace? Adam says, hee, I'm not going to be cute. Horace says, thanks, you're more than welcome. Adam says, another awesome session. Thanks, Michael, you're more than welcome. DJ says, hi, Mike, if you draw a pitchfork from the high of 28, let me see what you're talking about here, 2011, it's not about too far in the past. I feel like it's too far of a contractionary range. You broke the upside and downside. I could tell you right now before we even look at it. So I wouldn't necessarily focus on that one, but something that would keep it in mind. Ooh, big level here. I should definitely highlight that. You know what? If there's a lot of interest in both these pairs, I'm going to add them to my watch list. And this way, if we have further questions on it, here are the pairs that I typically cover on a somewhat regular basis. So we'll add that here to the mix. Ruth saying Sterling is dropping back into support as you indicated. Yeah, it's not surprising. We'll see if that gives us the opportunity to do anything here on the near term, but look a little bit more towards that support before you start to move higher. Many thanks for your eyes and brains. Have a great week. See you next week. Same to everyone here in the room. I got to run. I'm way over on time. Remember, we'll be back on for a free session with Daily Effects on Monday, same time, and then back here on SB Tuesday, Wednesday, and Thursday of next week. Best of luck trading, guys, and have a great weekend. See you then. Cheers.